Narendra, hi, afternoon. Good to have you on the show. Narendra, clearly it's the buyback cheer across the IT pack today, but fundamentally, would you say things have improved?
Yeah, good afternoon. See, as far as IT is concerned, I think it was very well known that the downside is limited, but I think there were few headwinds regarding the tariffs and what kind of decisions the US government may take. And after the news of Hire Act, which they are trying to pass, that has came, it is very difficult fundamentally to pass that kind of act in a very easy manner because there are a lot of complexities. So I think the market has taken some breather on that part that it does not look like it's going to pass too soon. Plus, there has been some kind of short covering as well because the downside is limited, and now things are gradually slated to improve in S2, especially if you see this latest quarter result where we have seen BFSI and financial services has been performing, and it is the ERD and manufacturing which has not been performing. And in S2, we are going to see at least some stable numbers from this pack as well. So I think overall, the IT, I think it's a play in a sense that downside is limited and the valuations factor has also become attractive. Most of the stocks and even indices are trading below their significantly below their 5-year averages right now. Now coming to the mid cap versus large cap, so we are more positive towards the mid cap IT names in comparison with the large caps.
The take coming in on the IT space, but we are back to the markets and take a look at two stocks that are doing very well in today's trade on the back of some brokerage action coming in. That's ABFRL and it's recently demerged arm ABLBL. That's Aditya Birla Lifestyle brands as well. So ABFRL is up about 3%. Morgan Stanley has upgraded the stock to an overweight rating, hiked the target price to 131 rupees per share from 98 earlier. They also believe that there's an opportunity for valuation re-rating, and this stock is an anti-consensus self-help story which could do very well going ahead. So good move coming in on ABFRL, but what's doing even better today is ABLBL, wherein the brokerage house has initiated its coverage with an overweight rating on the stock with a target price of 175 rupees per share. That stock is close to 150 right now, so significant upside from here. They view this company as a defensive discretionary play, and they believe that it can deliver a 10% revenue CAGR over FY25 to 28. So this also looks rather attractive to them, and this stock is up slightly more than 4% as we speak. Narendra, what is your take on some of these discretionary plays amongst the entire broader consumption basket like fashion, retail? What's your sense on all of that, especially after GST on fashion and footwear, for example, have been slashed?
Yeah, I think it's medium to long term positive, and the impact would be positive. And we are positively looking forward for H2 to be better than H1 in both discretionary as non-discretionary consumption. Especially the volume numbers would be key numbers to watch out for, and we expect that volumes to increase to be significantly higher in H2 for all these space. And in both these stocks, we also have a positive view as post the demerger. I think the growth would be better, and the balance sheet is also strong, and it's now on a pure play execution basis. We have to see how the company executes its growth strategy. But yeah, we also have a positive view on both these stocks.
You as well. An Indus Bank actually within the private banking names is your rank underperformer. It's down about almost 0.6%. Shivangi, analyze the entire private banking piece for us, and let me throw in SBI as well in there, the large caps largely from within the banking pack. And where is it that you see leadership now?
Aisha, if you talk about the Bank Nifty index, it has got stuck within a very consolidative band from the last 4 trading sessions, and we've seen that there has been very small pockets where the buying interest has been emerging in the entire banking and NBFC per se. But of course, some of the NBFC stocks are looking more positive at this moment, and some of the digital, wallet companies are also looking good. But if we have to talk about the heavyweights, I believe there is ICICI Bank, which has been consolidating, which looks like a stock which is getting ready for a good reversal. HDFC, of course, we've seen that from the last 4 sessions, the supports have been shifting higher, but there has been call writers which have kind of made the upside sticky. So we are, as of now, wait and watch on the HDFC Bank. But if you look at the SBI, talking from the smaller banking and the PSU banking names as well, these are looking quite attractive at these levels, and they've made a good base here with good amount of open interest activity seen here. So definitely PSU space is one stock which can be kept on radar for the next few sessions. But of course, Bank Nifty is in a little bit of a underperforming nature and a lackluster move. So we'll watch out and we'll wait for this index to decisively cross and hold above 54,500 for the next fresh leg of rally to continue on all these stocks.
Coming in on the entire financial and banking space, Shivangi, Narendra, as well as Kunal, thanks so much for joining us on the show. It's time to